Philip. Good morning to
Hi,
you.
Andrea.
Thank you very much indeed for coming in this morning.
Nice to see you.
What are we seeing here? Are we seeing a correction in the market, or do you think it's something bigger?
It's a realisation, a maturity of realisation that's going on that governments are broke. And it isn't just Greece, it's obviously other countries that have been running deficits for too long and too big. And the bigger question that investors are now asking, I think, isn't so much about whether Greece defaults or not. I don't think anybody actually believes that Greece will default or be allowed to default. Rather, that it's a question of when the IMF and when officials from the EU take control of the fiscal purse in Greece, much as the Premier League are taking control of some of the football clubs' fiscal purses. I think that's much more of an understanding of what's going to happen. That isn't the problem, though. The problem is if the governments are broke from Greece to Spain to Portugal to Italy and to the UK and to the US, where is the relief trade going to come from for an economy that doesn't seem to be able to generate its own growth at a consumer level for the foreseeable future? And if that isn't going to happen, where's the relief going to come from? And the concern, of course, goes right out to debasement and monetization.
It's a very bleak picture because the idea that quantitative easing can somehow disappear seems now to be wrong. The government needs to stay centre stage across the board, really. And yet the fact is that the markets are actually punishing the governments for their rising deficits.
Well, unlike some of the economists that come on this show, I'm not here to sell bad news. I just can't quite square the circle at the moment from an investment point of view for the medium term as to how we actually generate growth. And let's look at this, quite frankly, from market terms, because people are here to make money. That's what they really want to know what they're going to do next. You've had the most massive asset reflation in 2009. You've just punched in a 5.7 GDP in the United States for the fourth quarter. We're not picking up any jobs, and God help us if we show some more negative job growth today, because after that kind of growth, we've got to be generating jobs, haven't we? Maybe not. I actually believe we're in a secular unemployment problem, and that we're not going to get jobs back in a meaningful level for a very long time. But if after all of that asset reflation, that huge GDP number in the fourth quarter, we all know we've got an inventory cycle going on right now, is this the best we can get in terms of consumer confidence, investment confidence, and, of course, consumption? Because if it is the best we've got real problems going forward. And why we've got more problems going forward than we have coming from behind is, as I said, the governments are broke. We're not going to get any more fiscal stimulus from the UK, Spain, Portugal, Italy, et al. Yeah. We may get some more from the United States in the meantime, but that debt clock keeps ticking on all your media screens every day, and everyone's more and more conscious of it. In fact, I get a sense that the Americans are getting more neurotic about their own debt than previously. So where does the relief come from? And it keeps coming back to more and more onus is now going to be based on central banks to bail this out, and that creates serious monetary fragility in the next 6 to 18 months.
What do you think that central banks can do to try and reassure the markets? What should they be doing?
Well, they can do a whole bunch of things, but none of which is any good for the inherent value of money. They can keep pumping money out, they can make all kinds of changes, but ultimately, the more money they push out, the less that intrinsic value of money. And I can't see where any other relief comes from. All indicators right now point to the shift from paper assets as a store of value to hard assets as a store of value. I've got no personal need to tell you that. I've got no axe to grind. It's just simple fact. We're going to get more value put into something you can actually hold and trust than paper.
Now, we have actually been talking over the past few weeks about this flight towards physical assets, towards land, towards gold. Where would you suggest people put their money?
Where I've been suggesting it for a long time. You've got to go to gold. All indicators point to gold. This flush that we saw yesterday that's taken gold into the 1050, 1050, 1060 area is, of course, an asset flush that's going on. Money's just fleeing everything at this moment in time. But the more you look at what's actually going on and the reason why things are happening, the more you know that the biggest beneficiary here is going to be gold. And I think sooner rather than later, we're now entering a buy zone in gold, somewhere in this sort of 1,000, 1,050 level. Maybe we get the overshoot through to 950, but this is a stellar opportunity to load up on the gold you probably haven't bought up to this point.
Now, just at the beginning of this interview, you talked briefly about Greece. Do you think that it would give investors some confidence right now if we did see the IMF or the EU coming in and saying, this is what we're going to do?
This is what the Greeks want. They can't get through the anti-corruption stuff and the recessionary stuff and the austerity stuff and the you're not going to be as well off tomorrow as you were yesterday stuff politically. There's no political will for it. There's no political will in this country. You're seeing the Conservatives backing off as well from wanting to fiscally constrain. How bad is that? So They want the policemen to come in. They want the policemen to stop the anti-corruption stuff. They want the policemen to come in and say, no, we're no longer going to deal with bribes. This is where the money is and this is where it's going, because they can't do it themselves. And I expect the same to happen through many countries and ultimately in the UK too, because if the government politicians can't go and be fiscally responsible, someone else has to, or the game breaks.
You really expect that the IMF or the EU will have to come into the UK?
I think there's no political will for it. This is the problem you've got. The Conservatives, after a depression in this country, a bust situation created by a Labour Party, are 7 points ahead in the polls.
Yeah.
How dreadful is that? And now they're having to back off fiscal constraint because nobody wants it.
Philip Manduca, thank you very much indeed for joining us this
Pleasure.
morning.